All right, another Freedom and Finance video. Freedom through finance. Um, I want to talk about hedging a portfolio against possible war. Um, People have their opinions. Very somewhat divisive, controversial topic, but I think most people are against war. Whatever our opinions are, how do you protect your portfolio against escalation, like war escalation? We all hear about like the military-industrial complex. I'm pretty sure like this Iran war has a lot of similarities to like the Iraq war. We got to go in there or else bad people are going to get nukes. A lot of my investing strategy revolves around following the currency. So I'm expecting more government contracts and spending will be going to defense contractors. And I don't think this is just the United States. I think that the Ukraine war is just dragging on. I feel like Germany is going to be rearming themselves. South Korea might be rearming themselves. Japan might be arming themselves. Taiwan might be arming themselves. From a geopolitical standpoint, if just looking at the world like a chessboard, if the Iran war goes really, really bad for the U.S., it exposes us to, China will look at that and be like, this might be the best opportunity to try and get Taiwan because the West is just spread too thin. There's a lot of, I don't want that to happen, but it could. And I mean, it's not so much like my political values. It's just bad for, it would be bad for business. Like any border changing is like bad for business. I wish everyone would just like, okay, these are the nations, and because capital can just move through borders anyway, let's just pretend we're independent, but capital just flows around anyway. So, like, I wish people. I wish the wars cause a lot of damage just to change a country border, just so that a government can tax more people. Like the only reason to gain land is so you have more people to tax and draft, and so like that's why like China doesn't really need Taiwan. It's just less people to tax and draft. And like yeah, Taiwan's like an exception because they have like a lot of technology, but you kind of get the point. So anyway, hedging a portfolio against military escalation. My portfolio up to this point hasn't had any ETFs. I've pretty much traded individual stocks, but in this case, I'm not an expert on military technology. I don't know who Northrop Grumman, General Dynamics, Lockheed Martin, Palantir. I don't know who's gonna like come out on top 5-10 years from now. I mean, Palantir is probably making all the drone armies, like a lot, like who knows, maybe a lot of us are going to die 12 years from now from a drone strike that's, being invented by Palantir right now. I think a lot of the future wars are going to be done through autonomous drones that might be less and less actual men involved in them. But anyway, I wanted to mention that this week I added this ETF into my portfolio, SHLD, probably just stands for shield if I had to guess. It's kind of a cool like word because you're like shielding your portfolio. Up until now, I've hedged against war because when war escalates, it's going to negatively impact the stock market, at least in the short term. Even companies who have earnings that aren't affected by it, people are going to panic. Almost everyone really is affected by it because it affects fuel prices, which is an input. If not to your business, it's an input to your customers. And so like everyone's customers almost have less money because more of it's going to fuel and all their overhead. It's a huge headwind for the economy when fuel prices rise. So up until now, I've had like just oil, like 20% of my portfolio was oil and gas companies. That way, in a catastrophic situation where war is escalating, at least you have some part of your portfolio that can do well, and then you can like sell parts of that off to sell like other parts that are being oversold. Like Google, right? Like Alphabet stock will probably go down if war breaks out, but how much is their earnings really going to go down? Probably not that much. So it's probably going to be an overreaction. So you can kind of like move the money around. But anyway, I want to talk about this one. So I mean, here on stock analysis, you can go to holdings, and you could see that there's 61 companies in it, and it's got like 9% pounds. You'll recognize these names. There's some of them in Korea, some in like Britain, some in Germany, but it's primarily the U.S. The U.S. probably produces like by far more uh, military goods than anyone else. Um, so, I mean, you go into all these companies and like Palantir's PE is like really high, but like when you look at the financials, like let's see, operating income. I mean, look at that trajectory. I mean, this is why the PE is so high for Palantir, because like the expected growth in the future is just so high. And it's like, maybe this company will be, like leading in, autonomous drones or whatever evil shit they're planning. General Dynamics, earnings are growing, PE of 20. Like these are all like quality companies, so you're just kind of getting exposed to whoever might. And then there's some international ones. So the idea is like, oh, like the governments went insane and they're all sending us to World War III. Well, at least we'll have. At least we're not going to go totally broke in the process. So this is kind of like a hedging situation. So yeah, and it pays a dividend twice a year. I mean, it's been growing. Payout ratio is adequate. I typically look for a payout ratio between around 25%, because you want to be reinvesting most of your earnings, but enjoying some of them, and that just kind of applies to everything. Uh, so yeah, like I feel like back, it's the same price before war really escalated. So I feel like it might, I feel like it's a good time to enter. So yeah, I just wanted to make a brief video talking about this ETF and put it on your guys' radar in case you might want to add it to your portfolio. I'm anti-war, but I'm pro-money. So, and like based on like the pulse, like my vibe of the situation right now is the world doesn't want to get along. Specifically, one country, and I wish we would. I wish that the battlefield should be business, money, trade. It's still hostile and competitive, and it's highly consequential, but it's a much more civil way. It's a much more gentlemanly way to compete, and it's a much more civil game to play than shooting each other and blowing each other up. It's much more civil to sell each other things. But a lot of my strategies, like, okay, predicting how is the flow of currency going to change in the future, and I see an increasing amount of government contracts paying these defense contractors. Hence the name. Uh, um, Yeah, let me know what you guys think. If you guys, I still include, you could have like, just throwing numbers out here. You could have like 5% of your portfolio in this, and then 20% of your portfolio in oil and gas. And then you could have like the rest of your portfolio in like, tech companies or growth shit that you know. Let's hope there's no war. Let's hope things don't escalate, and the most of your portfolio is just going to do great. Oil and gas companies are probably going to do fine, even if war doesn't happen. And then, like, this ETF will probably like lag a little bit if there's not more war, but you're not going to go broke. It's basically a hedge, like I said. So yeah, let me know what let me know what you guys think.